What's up, y'all? I'm Kelley O'Hara. You may know me as two-time world champion and gold medalist, but there's a lot more to me than just that. I'm an entrepreneur, activist, and investor. I just moved back to the Big Apple, the financial capital of the world, which got me thinking about my own personal finances, which, at times, can be stressful. Financial stress can really wear you down, and if you know me, you know how much I value health and wellness. And I know I'm not alone. Many of you have the same problem and may be wondering, where do I even begin? Well, that's why I teamed up with the financial gurus at WIS to help us make sense of all this. Whether you're just starting out or looking to take your financial game to the next level, then this one's for you. From budgeting and saving to investing and building wealth, we'll cover it all and have you on your way to financial freedom.
At like 22 years old, I'm like, you're a millionaire. You just don't know it.
So you want to invest? I think that's a great idea. Let's do this. All right, we're kicking it up a notch to dive a little deeper into the world of investing. Joining me are Paul and Matt from WIS. So Matt, my understanding of private company investments is there's two kinds. One where you, as an individual, directly invest into a company. The other way is you're employed by that company and that investment is part of your compensation package.
Pretty true, yes.
Okay.
Yes.
But you know a lot more than I do, so please.
That's a little bit scary. So I think what's good to talk to your listeners about is the fact that this is generally spoken of as venture capital investing.
Okay.
Right? And that word venture is very meaningful because it typically is associated with high risk. Everything that you've spoken about so far is governed by the SEC, the Securities and Exchange Commission. And what that is in reference to your world is the referees. So all of those previous investments, public company equities, stocks, bonds, CDs, they're FDIC insured, they're registered with the Securities and Exchange Commission. In the world of private company investing, the SEC is minimally involved, if at all.
Okay.
So when you think about the risk profile of an investment class like this, it's a totally different ballgame.
Well, there's no referee. It's very risky.
Would you like to play in a soccer game with no referee?
No, I feel like I wouldn't survive that.
But you might want to play in it if I told you that the reward was outsized compared to the remainder.
Potentially.
So you would. So there's an interest here, and it's a way that people think of getting rich quick. The issue with it is that it's got to be part of a balanced investment approach to your life in order for it to make sense.
I feel like I've had friends, family that have been courted into potentially working for a startup.
Right.
And they've been offered as part of their compensation package, stock options or a percentage, or I'm not even using the right terminology. Talk through that. I don't understand it because I've only played soccer.
It's true is nobody understands this. So if we take it again at very high level, I've explained that the referee is minimally involved here, right? The referee has said, if you want to play in this game, you've got to have done a few things. When it comes to the world of employees accepting stock options, there's no referee at all. They have no rules. They don't say you have to have watched this much soccer before you could come here. You are merely, by the fact of joining that company, deemed to know enough to accept this stock in exchange for your service. And I think the biggest hurdle or problem for the people that are getting into this at the outset is that they don't understand, number one, how do they value what they're getting? So
for what they're doing.
Right.
Yeah.
Like you're an employee. If you were starting out your career and you were going to work at XYZ Corp and they were going to pay you $60,000 a year, you know exactly what the value of that is. When you receive private company stock, there's no exchange to go to understand what it's valued at. There's no place for you to say, well, my salary is $38,000 plus this number. And so you've got to do some of that work on your own. And people are afraid to ask the question of the company, help me understand what is this worth? How do we, it's really the onus is on them to be able to explain to you. You have to build trust with that company, but the company also has to build trust with you to receive that payment.
You've accepted a position, there's a vesting schedule.
Yep.
So that you don't actually own or, this is not, whatever you've accumulated is only the amount that has vested, right? Explain
right?
this.
And it's even worse. It's even worse than that.
Yes.
So truthfully, what almost all of these employees are getting are stock options.
Options.
Not stock.
Correct.
Very clear
I
delineation.
think this is a big, a misconception.
Yes. So the reason these things have value is that there's time built into them. So if the stock, for instance, is trading at $1 today, we've ascribed a value to it, it's $1. I say to you, hey, Kelley, I really want you to come work for me. I'm going to give you 25,000 options. And so you can come buy my stock for $1. You'd be like, anyone could buy it for $1.
Yeah.
Why am I special in this regard? And I say, because I'm giving you this piece of paper and you can come here anytime in the next 5 years and buy it for $1.
So you can wait until you've seen that stock rise.
Right.
And
you can
buy it at the discounted price.
Correct. So that's the arbitrage that you're trying to play here. So 5 years comes, we're not a public company yet. We don't play on the big soccer field yet. We don't have the SEC involved. There's nowhere for you to sell your shares. But you might have to buy them because that coupon, it's expiring. So you may have to come to me with money in hand and buy the stock and exchange your coupon.
And make a decision to own that piece that isn't actually worth anything at this point because it's not a public company?
You would typically not exchange it unless it was worth money.
Okay.
You typically wouldn't show up with your coupon
unless
you established like, okay, I could buy it for $1, it's worth $2.
But if it's expiring and the company hasn't gone public, what's happening then?
Very unfortunately, most options go and expire worthless.
You're SOL at that point.
You can go and renegotiate with the company and say, hey, this coupon you gave me is expiring. Again, why this is very high risk investing. And so when we think about how much of your portfolio should be allocated for investments like this should be a portion, and you should truly be working with somebody that understands it to help you make these decisions or at least evaluate them at the outset.
Exit. What does the exit look like? I think a lot of people think, I have this, I'm buying this for $1, it's gone up 10x, I'm getting that full return.
So if we think of the public markets, the common ones here, the New York Stock Exchange, the NASDAQ, I can go there and exchange any publicly traded company stock in seconds. The same does not exist in this world where the referee isn't there.
Okay.
So even when you make this exchange and now you own not a piece of paper anymore, but you own a share of that private company, number one, there's no line of buyers for it. There's no people standing there shaking their money that they're ready to buy it. And secondarily, there are restrictions on that stock of who you could sell it to.
Okay.
Because they don't want a lot of shareholders of that stock. If you have enough of these people that own this stock in a company where there's no referee, the SEC comes in and blows the whistle and goes, well, no, listen, you're going up to the big field.
Okay.
We don't care. You're no longer flying under the radar.
Okay.
So there are restrictions on what you can even do with those shares when you're a private company owner, that if you're evaluating one of these investments, I couldn't urge you more than to speak to somebody that knows what they're doing in this world.
I was just about to close it with Paul. Why is WIS important?
Yeah, I mean, I think, there's a lot of things that can go wrong. Right? So everyone, in a way, needs a coach in life, right? And I think in this world, you absolutely need a guide. It's treacherous. There are a lot of things that we really try to bring to the discussion to allow them to make a more informed decision.
That makes sense, and also seems extremely important. So I just want to say thank you guys for tackling this complex topic. I learned a lot, so I appreciate y'all being here.
Thank you for having us.
Thank you for having us.
Yeah, and thank you all for being here today and hopefully getting one step closer to financial freedom.